Hello and welcome to Business 24 live stream on iBrandTV, Nigeria's leading online TV channel. As usual, let's talk about business dynamics. I am Michael Nath. For a start, let's take a business tip. The channel you're watching is iBrandTV and the program is Business 24. Our focus on this episode is optimum return on investment at minimum cost of business delivery. What are the dynamics? Well, before we go into that in detail, let's take a few updates. CBN makes further moves against bad debtors. Now, the Central Bank of Nigeria has further moved against bad debtors, as it said it will extend its credit risk management system to the other financial institutions in the country. This follows the successful implementation of the CRMS in deposit money banks across the country. This disclosure is contained in a circular titled Credit Risk Management System, Commencement of Enrollment of all Development Financing Institutions, Microfinance Banks, Primary Mortgage Banks and Finance Companies, issued by the Apex Bank and signed by its Director, Financial Policy and Regulation Department, Kelvin Amugo, on April the 8th, 2021. CBN in the circular noted that this policy is to help promote a safe and sound financial system in the country, as well as prevent the bad debtors from undermining the banking system. Dangote clears air on high costs of cement in Nigeria. The management of Dangote Cement PLC has clarified that the price of a bag of cement from its factories and plants across Nigeria as at 12th of April 2021 is 2,450 naira in Obajana and Woko and 2,510 naira in Ibeshe, inclusive of that. The clarification was made in view of recent insinuations that the company sells cement in Nigeria at significantly higher prices relative to other African countries, particularly Ghana and Zambia. Dangote's Group Executive Director, Strategy, Portfolio Development and Capital Projects, Davakuma Edwin, revealed that while a bag of cement sells for an equivalent of $5.1, including VAT in Nigeria, it sells for $7.2 in Ghana and $5.295 in Zambia ex-factory, inclusive of all taxes. He said that though the company has direct control over its ex-factory prices, it cannot control the ultimate price of cement when it gets to the market. He advised that it is important to distinguish Dangote's ex-factory prices from prices at which retailers sell cement in the market. You're watching Business 24 on iBrandTV. We'll take a break now and come back with more. Stay with us.
Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiville Skincare and Spa. My name is Neil, and I'm proud to be a part of the Blemiville family.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services, and meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Yeah. Swift Dry Cleaners Limited. Yeah, for clean wash and quick delivery. Yeah. Swift Dry Cleaners Limited.
Swift Dry Cleaners. Clean wash, quick delivery.
You're still watching Business 24 live stream on iBrandTV. Now, to the focus of this episode, optimum return on investment at minimum cost of business delivery. Now, for a business, the most important performance metric in classifying a venture or an investment as a success is its return on investment, ROI. That is, the financial measure of how well the business or investment performed in leveraging a given amount of money to generate even more wealth. Return on investment, ROI, reflects how valuable a business or an investment is, or maybe a singular venture or a portfolio of investments. However, given various factors, not all businesses perform well, nor all investments yield as expected. Therefore, taking all factors and variables into consideration, let's examine how business venture can yield optimum return on investment at minimum cost of delivery. And now, to lead us through, I have with me here in the studio a dynamic, experienced and resourceful accountant in the person of Daniel Akanu. Daniel, you're welcome to Business 24.
Thank you so much.
Now, rephrased or simplified, how would you explain ultimate return on investment?
Okay, simply put, return on investment, it's the benefit that accrues to a business relative to the cost of the investment.
Oh.
I don't know if you get that.
Okay.
That's to say, I invest a certain amount of money in the course of doing the business for a certain period. This is what has accrued to the business in form of profitability. Let me use that word.
Now, what precisely constitutes cost of business delivery?
Okay, when you want to look at the cost of delivering a viable business, to do it properly, you have to be able to categorize them into fixed costs and variable costs. When I use the word fixed cost, what I mean, costs that we keep running irrespective of the activities of the business. While the variable costs, they are functions of the cost that you will incur as a result of the activities of the business for a particular period. So those costs will be a function of what you do in the business. But for the fixed costs, whether you do business or you do not do business, they keep running. An example is the cost of your rent. Whether you sell anything, the cost of your rent is running. You understand? Whether you sell or not, the cost of salary is running. So those are costs that keep running irrespective of the activities of the business. While the other one, they are functions of, for instance, you will incur cost of production when you produce, which is a function of what you produce, which is different from the cost of rent. You have to pay it. The landlord is not interested whether you sell anything or not. You have to pay his rent. So
Yeah, sure.
So those are majorly the cost. So if I want to break them down, you have the cost of rent, cost of salary, cost of fueling, cost of purchase of what you sell or what you cost of raw materials and all the likes. So those are majorly the costs that you have to incur to deliver a viable business.
Okay, now you mentioned rent as an example of fixed.
Yes.
Okay, now what happens in a situation where, for instance, a landlord adds one or two items, to further modernize or beautify the house or increase the available facilities in the house, and then with this addition, he decides to add more money to the rent, and charges the tenants there a little higher rent than they used to pay just because of those little additions. Do you still consider it as fixed?
The reality is that so long the landlord hasn't included that cost in your rent, it means it's a cost you are going to be paying on a regular basis for that period.
Okay.
You understand? But the reality is this: when in business, when you are considering cost, you actually consider, there are some factors you put into consideration when you are looking at a cost of rent, for instance. You have to look at the strategy and strategic location of that particular building or facility. You understand? If it is favorable to your business, then it means that it's a cost that you have to incur. But if for whatever reason you believe that there is another facility that can give you the same level of achievement at a lower cost, you understand, you could be able to kind of do some variation, but that will still take a while before you can make that kind of adjustment.
All right. Now, what is the place of cost accounting in business delivery?
Now, when you talk about cost accounting, in simplicity, for you to be able to measure the performance of a business, you have to know the cost implication of that business.
Kind of do a research.
You have to look at the cost of the business, the cost you incur in running that business.
Okay.
For instance, I give you an instance. Now, majorly, cost accounting help managers to make decisions. It's basically to help you to make business decisions. So you have to know your cost in relation or relative to your revenue generation. For instance, if I have to incur cost of 10 million to achieve a sale of 5 million, am I in business? No. You understand?
That's a huge loss.
That's a huge loss. So you have to look at, okay, what are those costs that I can incur and what is the relative revenue I'm to generate? So that will inform your decision as to whether you have to continue in that business, or if there are some factors you have to look at to be able to adjust the cost in such a way that you will make either break even at a particular period, then start making profit or not. You understand? So for me, cost accounting is very important in business. Now, let me tell you this. Most businesses, they ignore the place of cost accounting in business, and most times they are grounded because when you don't know your cost, you can't measure your performance in business.
Sure.
So that's it.
Now, we've been talking about cost accounting, meaning one has to know it.
Yes, very important.
In order to achieve the desired results in the business. How would you, what would you say about a rural woman, an illiterate in the village or in the local market who is doing business so successfully without having an atom of knowledge of cost accounting? Because they do not consider all this, they didn't go to school. All they know is that every day they go to wherever they buy whatever and go to the market, sell and make huge profits on a daily basis. They do not consider all those things. Placing the two side by side, how come it's working for this and cannot work for the other person?
Okay. You see, the error we make is you don't actually have to be an accountant to be able to measure your costs.
Okay.
That market woman he's aware of the cost he or she will incur in buying what he or she bought to sell. You understand? So at the end of the period, you will see the cost, that woman will sit down and say, okay, I bought this thing at the rate of 10 naira. So how much was I able to sell? That will inform. That's why you can see a woman that you bought a cup of rice from today at the rate of maybe 15 naira. When you go there tomorrow, they will tell you that it's 55 naira. She has been able to look at her cost and has adjusted the sales price of that product in order to accommodate profit. So which means she has looked at her cost. So it might not have been termed as cost accounting to her because she's an illiterate, you understand? But inherently or indirectly, she is actually looking at her cost in relation to her revenue.
Oh, I see. You see, what you just said, that one doesn't necessarily need to go to school. There was this case of a trader, an illiterate. He was asked 20 plus 20. He thought and thought and thought, couldn't arrive at the answer. Then somebody else said, how come you didn't know the answer to the simple question? He said, please go. He was now inviting other buyers to come and patronize him. Then somebody else said, the question they asked you was 20 naira plus 20 naira. Hey, I said, now you've come. Oh, 20, it's 40 now, it's 40 naira. He didn't go to the market, but it had to do with money. So he had the answer.
So you understand it that way.
I see. Now, the sole aim of every business is to make profits. What percentage of this profit can be considered good enough, excellent, or fair for a return on business?
Okay.
Or a return on investment, rather.
Okay. Now, it has to do with the industry that is involved.
Okay.
However, generally, I think an average of 10% is good enough for business. Is good enough a return on investment, though it has to do with the period. It has to do with the period of the that you are looking at. For a longer term of business, you could have a lower value, but which can still be good. Mm-hmm. You understand? But averagely, 10% is good enough.
All right. What about excellence?
Is within that range, 10% or 10 points, you understand? Because the reality is that you are not the only person in the market. There are other factors that mitigate against your profit. So on the average, like I said before, a return on investment, or generally cost accounting or cost measurement in relation to your revenue, is actually important to help you measure your performance in business. It informs your decision. You understand? So because of that, you have to put a certain parameters to measure your performance so that you know that, okay, I'm still comfortable at this level. Because you must understand that you are not the only one in business. Mm-hmm. There are other factors that mitigate against your activities in the business, against your profit and all of that, which are cost relative.
Oh, I see. Now, I heard you talking about measure this, measure that, Is there any particular formula for calculating return on investment?
Yeah, it's a very simple one. It's actually one of the simplest method of measuring performance. It's simple: your benefit or your profit divided by your cost of investment. That will give you the value. Usually measured.
Can you please repeat that?
It has to do with your benefit,
okay,
divided by the cost of your investment, or simply put, your profit divided by your cost of investment.
Wow, I see. Okay, now in the case of exigency, in a situation where price or the costs rises unexpectedly, how can a business, what should a business do in order to remain afloat?
Okay, it is a normal thing in business.
Okay.
There are times that costs will rise beyond your control. But the reality is that there are businesses, because of their strategic positioning, they can actually transfer the cost of their production to the price of the product or the price of the service. But there are some businesses they can't do that. So my take on it is this: for businesses that can transfer, you transfer that rise in cost of production reasonably on the product. But for those companies that cannot do that, so they have to find a way to break even for that period while they gradually move the price of the product in order to accommodate a level of profit. So I think that's the way you can be able to handle it. because as cost, except you don't want to continue in business. But if you want to continue in business, you have to strategically think on how can you manage that period, because those kind of periods usually last for a season. You understand? But when you are able to put strategies in place to handle that period, you will see that on the long run you might break even, but in the short run you can break even, but in the long run you see that you can recoup all the losses and the likes in the long run. But the ideal thing is to find a way to remain in business while you manage that period.
In this context now, how would you explain a situation where a businessman or woman, for one reason or the other, which is peculiar to him or her, decides to arbitrarily raise the costs of the products he's into?
The cost of production or the cost of what you sell?
They sell.
What you sell?
The business person sells.
You see, the reality is that every businessman is in business to make profit.
Sure.
The reason before you be able to do that, it means you have been able to have a reasonable acceptance for your product. Do you understand? For instance, I know of a company that the cost of materials for production of their product is on a consistent increase. But because of the competition involved in that business, they cannot transfer the price. So they are still doing the business within their old price. The reason is this: if they decide to move the price up, the competitors will take over their market. And once that happens, you will end up losing everything. So what are they trying to do? They are trying to manage that period to see that even if we are breaking even or we are not making so much profit as we used to make. Remember, loss is painful, but it's part of business.
Sure.
There are businesses that will make consistent loss for like a year or 2 years.
And they still continue in the business.
But a time will come where they have been able to study the market, study their competitors, study their product, improve on their products, and improve on their service delivery, and they'll be able to shoot their price up while costs remain, and they will recoup all the losses that they have incurred over the period. So is one thing I want you to understand is that profit is the reason for business, but loss is also a part of it.
Is a part of it.
So you can't rule that out outrightly. So there are times you make profit, there are times, but if you manage your resources well and put a structure in place and activities in place that can help you monitor your product, your service delivery, the activities of your competitors, and you are able to harness them together, I believe that you'll be able to make good profits in the long run.
Okay. Now, there are situations where a trader would go buy commodities for sale, and towards the end, he discovers that those items are about to finish, and then he decides to go back to the source in order to replenish the goods that almost running out.
Okay.
Getting there, he finds out that the price, the price, yes, has changed, either higher or lower than the previous one.
Okay.
What does a trader do in this instance? Does he now decide? Does he now add? If, for instance, it's gone higher, talking about the old stock, does he now have to add more money, or finish selling the old stock at the old price and then start selling the new ones at the new price?
Okay. Now the reality is this is where strategy comes into play.
Okay.
Can I ask you a question?
Please do.
What if the trader gets to the market, he has old stock, and the price of the stock of the product in the market has fallen?
Okay.
And he has to sell and let's even assume that the products are perishable products, and he has to sell the product, it means she has to sell at a lower price.
Sure.
At that time, she will be making a loss.
That's
You
true.
understand?
That's
So
right.
in the same vein, when it gets back, most traders, what they do, they have to sell the old stock at the current price. Now, in business, there's what they call, I think in cost accounting, there's what they call normal loss and abnormal loss.
Okay.
When you are making a normal loss, you are a bit comfortable. But when you begin to make abnormal loss, it becomes a wrong signal in business. So also, there are some time where traders have to make abnormal profits to cushion the period for abnormal
Losses, yeah.
You understand?
Yeah.
So it's always like that in business. You make up for your shortfall in a particular period when the opportunity arises. Because there are times activities of competitors will crash your product, the price of your product that you bought at a higher price. And what will you do? And if you don't sell, you might be going out of business. Might be losing your contact, losing your market share and all of that. In order to retain your market share, in order to retain your turnover, so you have to sell at a considerable price that will not allow you lose your market share to your competitors, because you know in the long run you are going to make the profit. So when those kind of opportunity come, when you have made business, you bought something at a lower price, you get to the market, the price has risen, gives you an opportunity to take the price of the old product up, so you can cover up for the losses for previous periods.
Thank
That's
you.
the way I look at it.
Thank you very much, Daniel.
welcome.
Thanks
Thank
a lot.
you.
Okay. And for you out there, I hope you now know what return on investment is all about. And from the knowledge you must have acquired from the explanation the expert gave you, you will now be able to maximize profits in your trading and other businesses. Thank you very much. It's been my pleasure playing host to the show. I'm Michael Nath. Next week, another interesting edition will come your way.
iBrandTV. Business first.